Welcome back. Well, as the spread of coronavirus continues across the world, markets are plummeting. China is on track for its worst first quarter performance on record, with the National Bureau of Statistics revealing that its 15-year-old index plunged lower in January on the back of coronavirus than it did during the global financial crisis. Joining me now, business and financial expert Peter Switzer, live from Sydney. All right, Peter Switzer, we're going to rely on your big brain and ability to communicate to take the issue of coronavirus and help people understand what the impact could be to them personally beyond what we know about the budget and the economy more broadly. Should Australians and particularly superannuants be concerned?
Well, let's start off with superannuation. Thanks for having me on the program, Peter. Look, I think that the most important thing is I wouldn't worry if I was in superannuation. I don't think this is going to be a permanent and serious problem for the stock market. I wrote a piece on Switzer Daily this morning where I actually got a chart which showed what kind of stock market response have we seen with the big equivalent viruses like SARS, Ebola and whatever. And each time, Peter, even though the market went down by different amounts, the rebound was usually pretty strong. And so I think the bottom line for us, and remember that the superannuation funds were all inextricably linked to the stock market. I think that we're going to see a month or so of probably scary headlines and market going up, market going down. But I think eventually by the second half of this year, we'll see a rebound and super returns will start to improve. And the bottom line is it's the statistics on infections and deaths, particularly in Europe, versus what's going to happen to the economy, economic statistics, and then financial market statistics. And that's why what the Reserve Bank does tomorrow, and I do think they'll cut interest rates tomorrow, and then what Josh Frydenberg does with the budget, all of those things are going to be really important to offset the negativity which is currently prevailing, explaining that $5 trillion has been wiped off global stock markets since everyone started getting really scared about the coronavirus.
All right, let's talk about the RBA because we're really getting into some very, very low numbers, although, as everyone at home knows, it's not necessarily reflecting in the amount you're paying each month with your own mortgage. But in terms of the official cash rate, if they drop it further, Peter Switzer, is it going to make any difference?
Marginal difference. Marginal difference. The people who are paying off home loans, where they've over-borrowed, they will find the relief. Others, by the way, would just actually save the reduced payments on their home repayments. The level of Australians actually overpaying their mortgages has never been so big. And I think one benefit of cutting interest rates, and by the way, I would prefer them not to, but the one benefit is that it drives the Australian dollar down. And you might have seen this morning when we woke up, the Aussie dollar was at 64.7 US cents. That does help the economy, Peter. But I think the really heavy lifting is going to have to be done by the government in the budget. And I think tax cuts and government spending, particularly on infrastructure and repairs linked to bushfires, drought and the floods, will be really important initiatives to look forward to.
All right, let's just talk about some macro budget issues then. I remember back in the middle of the GFC, one of the only reasons we stayed out of those 2 quarters of negative growth was the strength of agriculture. Well, agriculture is losing its marketplace in that the Chinese are not taking in the same volumes of fresh fruit, vegetables, seafood, etc. as they normally would, particularly around their Chinese New Year celebrations where they usually spend big. They certainly weren't. They were all held back. But then there's also broadly, the factories of China are all in abeyance, have all been shut down, and that's holding back supply chains around the world. Where do you think the government's going to go in this budget? Do you really think that they'll bring forward those tax cuts?
Well, I think that would be the smartest idea. It would be a courageous decision in terms of what they were expecting to do. And, as you know, Peter, the budget was heading in the right direction until the bushfires, then the floods, and the overall implications of the drought haven't been helping the budget bottom line, but it was heading in the right direction. But let me tell you this. On Saturday morning, when most people were looking forward to either football or going out watching their kids play sport or whatever, I was watching, as you could expect, Wall Street and business news, and the Dow Jones was heading to probably an 800 to 1,000 point fall. Then the central bank boss, Jerome Powell, came on TV and basically said, we'll do what it takes, which code was, I'll cut interest rates. At the same time, the Bank of America said, yeah, and they might even cut by 0.5%. And that just turned around. The Dow Jones turned around, and up went the index. I think it finished down about 330 points. But that is just one part of a repair program, easier to do in the US because their official rates are slightly higher than ours. End of the day, for Australia, it's going to have to be spending by government and also tax cuts because, as you pointed out, lots of important drivers that helped the economy during the GFC, namely China, have been put on hold. That said, I am surprised how quickly China is coming out of its ban on factory production, ban on travelling. Will prevent them from travelling. But certainly something, I think, but by the end of this month, they're expecting something like 80% of factories to be back online. Now, because they've been so aggressive in closing down China, China will actually probably come back online quicker than any other country of the world. And I guess the big watch for the world economy is going to be Italy and the rest of Europe.
Hey, now that is fascinating that China's going to come back and it'll come back so quickly. And of course, they've got all the levers, being the type of government that they are, that they can bring themselves back into production faster than elsewhere. I'm interested about the United States because, I mean, one of the issues in the middle of a political election year for the president is if the economy goes south, that's a real opening for the Democrats. But if the economy stays strong, you'd have to say, particularly if he's up against Bernie Sanders, it's more likely to be a Trump win. Do you think that they're through the worst of coronavirus in the economy in the States?
Well, I've got to say, Peter, when you asked that question, I remember during the '87 stock market crash, I got the great honour of interviewing John K. Galbraith, who's one of the greatest economists of all time. And I asked him a question, what do you think will happen with the October crash? And he said to me, well, Peter, there are those economists out there who say they don't know, and then there are those poor fellows out there who don't know they don't know. And I think that is the issue. How well a US can contain the implications of the coronavirus. Let me tell you this, the US economy under Trump was scheduled to have a very good year. You know, it was going to be playing right into his hands to win the election in November. Certainly, I think he'd be moving heaven and hell to make sure he contains it. But as you pointed out in your earlier part of the show, this is a particularly virulent virus, and we just don't know what's going to do. But if they can control it, and it is slowed down in the case of America, I think the US economy will roar back. And that's the important point. When the Yanks cut interest rates and they go for more spending, and in Australia as well, if we can do both of those things, and particularly the government spending, I think in the second half, the economy will roar back. And you remember stock markets, they buy on future expectations. So they're selling off now because they're scared about the next 3 to 6 months. But beyond that, if the government steps up and really spends, I think the stock market roars back, and so will our superannuation.